Welcome back, Alpha Hunters. Hope you had a great week. It wasn't really too much going on this week, but we will take a look at a few things and just kind of get an idea of what we can expect kind of going forward. So this week's outlook will be a little bit less busy than last week's. Last week's, man, we had so many earnings news. This week, not so much, but we have a few that we'll kind of take a look at. And then some other kind of just indicators or things that we just kind of want to be mindful of and just kind of watch and pay attention because they could potentially be having some impacts on stock prices and the stock market kind of going forward. So let's just kind of be aware of those situations. But let's get it going with taking a look here at the SPY and just kind of what went on this week. And we can see that really compared to the two previous weeks, we had a pretty mild week. Like there wasn't much kind of going on. We did end the week up. This is going to be the weekly view here. So we did end up pretty good. And I think we're going to be bullish a little bit longer. And we'll just kind of have to see where we kind of make our way out to. So this is the intraday chart pattern looking like. So, Monday, Tuesday was pretty range bound. We didn't really do much. And then Wednesday was the day that we got pretty much most of the activity. Okay, so here's Monday off on the left side and Tuesday. And then Wednesday we got pretty good bullish activity that kind of came in. And then Thursday was pretty choppy, kind of sideways. And Thursday was a super quiet day. Not much really happened. It was probably one of the more quiet days we've had so far this year, as far as like the peak high, peak low of the day. And then Friday we gapped down on the jobs reports numbers that came out in the morning. We'll talk a little bit about that here a little bit later. But then you just saw strong buying for the first 45 minutes to an hour straight up. The second hour pretty much down, and then just kind of kept chopping. Didn't make a new high or low pretty much for the rest of the day on the SPY. But let's talk real quick about where we can probably get to on the SPY here, since we're just looking at it right now. And I'm going to bring up this bear market tracker and just kind of see where we think we can get to. So I'm going to throw some numbers in here. This is roughly where we're currently at, about 415.68. That's not where we currently are because that was where I entered earlier. But we are currently at like 413.45. So if it's 413.45 is where we are currently at. That would be a 51% retracement of the previous bearish move, okay? And the bearish move that I'm looking at is from the peak on March 29th to the low on June the 17th. So we are about 50% into that retracement, okay? So if I threw a fib on here, you'll see that we're roughly 50% back to that retracement, just past the 50% mark. So I would expect we probably go a little bit higher, and this is going to be the reason why. As we can see, some of these bullish retracements that we've had, typically they go well past the 50% level, okay? And we saw that happen quite a bit in the financial crash of 07, 09, and the tech bust back in 2000, 2002. The only times we didn't really get past 50% was when we were towards the end of what seemed like the bearish bearish move on the market. So that'd be about the only times we didn't get past the 50%. But every time we did get past the 50%, we definitely got into the 60% area. So if we do get about to the 425 area, that would be past the 60% area. If we do get to 433 or so, that'd be a little bit past 70%, almost 71%. So that is still within range. So if we go back to the charts, let me just kind of put a box out here for us so you can see. And it's pretty much going to line up really closely with this green box that I already got out here, that's been out here for a little while. But pretty much right in this area, that is where we're going to look for the market to probably eventually get to. Okay, so I'll remove the blue box, but pretty much that green box that we have here, and I've had this here for a long time, going back several months, that is typically the zone I'll be looking to probably be a little bit more aggressive to the bearish side as we maybe get up into that zone. But for now, we're just chopping around in the zone that we were in back in the beginning part of June. So once we kind of break through that, I would imagine we move through the 420s probably pretty rapidly to get to the upper 420s or to the lower 430s, probably pretty quick, maybe over 2-week period, kind of like what we had in the 2 previous weeks, just a really quick move. Okay, so that is pretty much the SPY. Looking for a move up to the 425 to about the 434 type of area. Somewhere in there, I think would be a good spot for the market to probably start to look for a rollover. So if we look at the Qs, you know, they did really well. The most bullish day of the week for the SPY and the Qs was definitely Wednesday. So if the SPY starts to push higher, we're definitely going to want to keep our eye on the Qs to see, you know, do they break through this downward trending line, or do they start to lag a little bit as the SPY just kind of thrusts higher? Because the financials were setting up pretty well. The energy stocks were beaten up this week. So we could see that those maybe carry us higher this next week, and maybe the tech stocks maybe start to take a little bit more of a back seat. So not really sure where the Qs would get to, but it'd be very interesting to see how it interacts with this downward trend line. And we also have a pretty good resistance coming in here at 330. So it's going to have plenty of resistance here this next week, probably in that 328 to 330 type of level. But if it does break through those, I could definitely see it getting to the bottom of this little pattern right here, which is around the 335 type area. And let me put a box out here for you if you want to see what I'm kind of talking about. Somewhere in this area, roughly that 328 to roughly 325. I know it's a little higher than 325, so 337. That would be what I'm going to be looking for on the Qs at least. But if you notice over here, the SPY and the Qs were down pretty good today. The IWM though, man, they crushed it. They crushed it pretty good Wednesday, and then this morning after the jobs reports, they opened down pretty much right with the market, down about 1%, and they just got bought up really well. So definitely look for the IWM to continue its strength as we go into next week. And for me, it kind of makes sense to get to the bottom of a lot of this consolidation pattern that it had back in the February to March time frame. So around the 193 type zone to 196, I would say somewhere in there looks probably pretty good for it to start topping out as well. Now let's talk about 3 stocks real quick that I absolutely think you should stay away from. One of them is Coin. You know, even though it looks like it is set up a really good basing pattern here over the previous few months and it is starting to pop higher, I don't think this is one you want to own long term. I think they have a lot of issues. I think the crypto market itself actually has a lot of issues, and since it's so heavily tied to the crypto market, I think you definitely were going to want to stay away from this one, as I think there's just going to be better places to invest your money that are not going to be such high risk. If you want direct crypto exposure, I would go with the cryptocurrencies. I wouldn't go with Coinbase. Coinbase, to me, just has other issues kind of going for it. And another one of these companies along the same kind of line is Piton. Piton, you can see that has formed a pretty good base here over the 2 previous months and looks to be kind of pushing back to the bullish direction. This is another one I would highly recommend just staying away. I think they have a lot of issues. Like Coinbase, I think there are better opportunities out there in the investing world than this one, rather than just putting your capital at risk, which is a big no-no, right? You don't want to put your capital at risk. I think trying to invest in something like a Piton is going to be a little bit more of putting your capital at risk. And really with all 3 of these, it's kind of hard to go bullish or bearish because you never know when the selling is going to come back in. They all kind of look like they're turning bullish, but it's going to be hard to go bearish on them because they've been beaten up so bad. So they're just kind of in no man's land, but they have really just bad business models, and I don't really see any good outs for them. Now, Coinbase and Piton, I actually think could be some acquisition targets down the line, but I wouldn't place any bets on it. But this third company, Hood, H-O-D, you know, many of us know Robinhood. They have helped change the broker world for better, even though they might have a flawed business model. They have really helped reduce fees for transactions and trading. So they've at least benefited the broker industry for the smaller players like ourselves. But this is another one that I think just is absolutely going to wind up dying away just because their business model is probably out of the 3 the most flawed. I don't really see a good out for them. I don't really see why a company would come acquire them. They have a hard time keeping their customers in. And really it started when they introduced options onto their platform. A lot of their customers started, you know, losing money, and that's never good when you're a broker and you're requiring, you know, transactions to make fees. And obviously, they don't make fees off of their customers. They make fees off of selling transactional volume. So I just don't see how Robinhood is going to make it. And I don't really then see why a company would acquire them. So those are three that I would highly recommend you staying away from. Coinbase, COIN, Peloton, PTON, and Robinhood, HOOD. So let's talk about a few companies that had earnings this week. AMD. You wouldn't know it, but AMD actually gapped down pretty good on their earnings Wednesday morning. They just got bought right back up. They had a very good bullish day on Tuesday, and then they got bought right back up pretty good on Wednesday. They didn't get back to positive territory on Wednesday from Tuesday, but Thursday, I mean, look at that bullishness. That is crazy bullishness. Just winds up just going right through their pre-earnings high. So yeah, pretty strong there on AMD. I don't really know if you can touch it to the bullish direction because that's pretty strong, but I would just wait for potentially a pullback, but we might also just see, the market roll over here over the next couple of weeks. But a company that had its first full quarterly earnings was WBD, Warner Brothers Discovery. And really, they got absolutely hammered on their earnings. They just missed on top and bottom line. This thing just absolutely got obliterated, just down. Yeah, I think this thing gapped down roughly 15% or so, 16.5% on a gap down. That's a dramatic gap down, especially for a company the kind of the size of Warner Brothers Discovery. So we're going to see if they, since they split off from AT&T, what kind of happens over the next few quarters. And what they're going to kind of do. Are they going to get into more streaming and stuff like that? So we're going to have to see how that kind of works out. And one of the stocks that really broke down today was Tesla, TSLA. They didn't have earnings, but compared to what the market didn't really do much. It was just kind of bought up and just kind of hung out. But this thing just gapped down with the market and sold off really hard. It actually ended the day down roughly 6.5%. So I would definitely be a little cautious here on Tesla. This might have been the trend changer day for Tesla to where maybe it just starts rolling back over. It's kind of hard to argue it winds up taking over today's price action. That's a pretty aggressive move there on TSLA. And let me show you a stock that nobody's probably heard of except for this week because it's a recent IPO. It's called HKD, AMTD Digital. They're based out of Hong Kong. And this is just absolutely nuts of a price chart. And the reason why this thing was making such huge headlines is I'm gonna have to turn off logarithmic scale to give this some massive credence. It's just crazy what happened with this thing. It went from, it IPO'd around 16 points, and within a couple weeks, 3 weeks, it got all the way up to a high of 2,555 points. That is a dramatic move. That is the kind of stuff that complete one-offs. I really didn't think I would ever see something like this again in my trading career. After the GameStop parabolic move from 2021, pretty much early last year, but this one pretty much dwarfs it in every way. This is a huge move. This thing got to a value that wound up being higher than 480 other companies in the S&P 500. That is huge. There was only 20 companies in the S&P 500 that were larger market cap wise than this one. And I don't really know what drove it. I'm kind of curious to see what kind of comes out, but I did look at this company's website and a few other things, and there's nothing to indicate that they were doing anything revolutionary. They sound like just a typical tech company, to be pretty honest. And if you do notice the volume that wound up dropping off here over the past few days this week, that means a lot of these brokers absolutely shut off any kind of marginal activity. You had to do like cash orders only. That was the only way to be able to buy shares in this company. And if you had shares, they would let you sell them. But yeah, the bid-ask spread when I was looking at this thing 2 days ago was 300 points. It was a 300 point bid-ask spread. So yeah, this thing was just a monster over the previous couple of weeks from its IPO. There's probably no way you could probably play it. I couldn't imagine your broker letting you play this in any way. And if you could, I would not. I would not even come close to touching this. I would just sit back, relax, eat some popcorn, just kind of see what comes out of the news and headlines and what drove this, because there's going to be people researching this, probably regulators and stuff like that, because that's insane. So let's talk about the dollar and rates, because they are pretty important going forward. So I've been wanting to kind of talk about these. The DXY had been continuing higher really over the most of the summer. We've had a little bit of selling here to come in over the previous few weeks, and then we got back, and it looks like we're bouncing here a little bit from this week. So Tuesday we got really strong bullish activity kind of come in, and then today off of the jobs numbers we also see the dollar increasing quite a bit. Now a big reason why that is because the jobs report. Okay, so the jobs report came in very strong. So we added 528,000 jobs, I believe, and it dropped the unemployment number down to roughly 3.5%. I think it was 3.5%. If I'm wrong on that, my bad, but it decreased over the previous month. So that was a huge deal, as that is an indicator that we are still going to be seeing inflation. As jobs stay abundant and unemployment stays low, inflation is going to stay around. And since inflation is going to stay around, interest rates are going to rise. Since interest rates are going to rise, the Fed funds rate is going to rise. All these things are going to continue to kind of hamper stocks going forward. So I do think stocks are getting a little top heavy here. And the recent activity from the dollar and the TNX here, look at the TNX, kind of look like the same thing, right? Very strong Tuesday, Wednesday, Thursday, a little bit of a pull down, and then very strong today off of the jobs number. So yeah, as long as the jobs numbers stay really strong, we are going to continue to see higher interest rates and strong dollar, which is then going to continue to put pressure on stock prices. So that's really about all I got for the week. I would definitely be watching the TNX, the DXY, or whatever kind of rate metric you want to watch. The TNX is the 10-year Treasury note yield. There's plenty of options out there. You can go the 10-year US 10-year government bond. You know, that's the same thing. But I would definitely be watching these. These are going to be very important. As they start to trickle higher, it's going to really put some pressure on the stocks to stop going higher and probably eventually start to sell off. So you're definitely going to be watching these. If these continue to push higher and the market pushes higher a little bit more, I would be a little bit more cautious on the market. That's about all I got for this week. Hope you have a great weekend. Stay cool out there, because it ain't going to be cool here in San Antonio. Alrighty. Take care, Alpha Hunters.